think certainly the stock market's had a big influx of foreign capital. I mean, that's not a space that we follow, but it does change sentiment. Similarly, from a foreign investment into real estate and infrastructure, it's getting stronger, and there's a lot of people looking at the market more seriously and taking a view. So clearly, it's visible in the change in the stock market, but we're now seeing a lot of interest both in infrastructure and real estate for more longer term styles of funding, and now with the opening up of ECB type structures and liberalisation within the debt market, there should be some pretty positive changes. Equally, with the budget just announced, they've confirmed that they'll do infrastructure and real estate REIT structures will be approved, which will allow a bit more liquidity, probably a bit more professionalisation in that space, and you'll see a lot of the traditional developers, whether it's power or in the infrastructure space, now going onto the market with independent managers, and that'll create a lot of opportunity for foreign investment in a fairly quality environment for them to sit on the market and watch it grow. It's interesting. I've both my business partner and I discuss it all the time. We're trying to understand what's the best way we can communicate to investors about the risk of India, because it's true. I mean, business is about predicting a cash flow and predicting an outcome going forward, and India is challenging. Things can change. The government policies can change. And certainly the market can change. You know, Asia is volatile. We've seen a history of external influences hitting Asia over time. So, and for India, you know, it's performed probably better under some of that stress than a lot of other markets in Asia. However, we try and articulate in a fashion that depending on the spread of in our case, projects and the market segments that we look for, we can get a greater predictability. So you need to focus on areas that you understand within India and make sure that you take the time to understand them, and it does take time and it takes investment. But if with a sensible spread of risk across segments of the market, you can get some predictability. But if you like, an index around a band would be more suitable. So we generally put about 80% of what we forecast into our broader business case, while keeping individual lines of business targeting a higher outcome when we're projecting for ourselves. Within a financial year, we bring it down to about 80% for unknown issues that we can't predict at the beginning of the financial year.